Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. If you have questions after the webinar or want to post content, any topics related to the topics of my presentation of this channel, the best place to do that is in Bookmap Discord, the Options-Doug chat channel. You can ask any questions there. Also, I'm on Discord. That's the best way to contact me. Doug P is my name at Discord. And again, Options-Doug chat channel and Discord, Bookmap Discord. And then finally, I'm on X, formerly known as Twitter. My name there is @DougPless. So that's the best way to contact me, the best ways to contact me. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional planning. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow and Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. And setups can be taken with futures, shares of stock, or options. For example, looking at ES futures, setups that I talk about today can be taken with futures, shares of SPY options, or SPX options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord, as well as the chat and YouTube for your questions and comments. And again, remember, if you have a question that comes up after the webinar, for all of those of you who are in YouTube, the best way to contact me is in Discord. All right, Deborah, hello. Glad you're here. Welcome. My agenda for today, what I want to cover, economic data, events and earnings for today as well as the rest of the week. Then I'll go through my positional analysis, my planning for today. Then I'll review a few setups from this morning, and then we'll take a look at the live market. So if anyone has any stocks they want me to take a look at when I get to the live market, please let me know, and I'll be glad to do that. All right, so let's start with the news items. Economic data. There were a couple of reports this morning. First of all, the ADP employment report came out at 8:15 a.m. Eastern Time. That was lower than expected. And then at 8:30, GDP report came out, and that was also lower than expected. So bad news is good news. Both reports lower than expected, and the market's trading higher today. All right, so tomorrow PCE data comes out. That's an important report. And then finally, the jobs report is on Friday. Both these, PCE and jobs data at 8:30 a.m. Eastern Time. Again, PCE tomorrow, Thursday, and then the jobs data is on Friday at 8:30 a.m. Eastern Time. All right, let's get to positional analysis now. I'm going to start with Bookmap. This is the ES futures in Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to an SPX chart. This is a 30-day, 1-hour chart showing just price and key levels. So let's take a look at price first, and then we'll focus on the levels. So this is the options expiration, the August options expiration. Somewhat of a balance, maybe a little bit more put dominated options expiration, meaning traders are long puts, market makers short puts that expire at that expired on Friday, and that when those puts expire, market makers can buy back their short hedges, and that helped to fuel the this put vanna rally that is pretty typical in a negative gamma environment. So gamma notional for the S&P 500, SPY, and SPX was quite negative, and again that helped to fuel a put vanna rally. Then there was a sharp drop lower the day before Jerome Powell spoke at the Jackson Hole Symposium. That was on Thursday. And then Friday, when the market interpreted whatever he had to say as not as bad as expected, the market rallied. And then here is the strong drop in Treasury yields yesterday, based on the weaker than expected data, fueled a huge rally, and that appears to be more or less continuing higher today. All right, so key events: options expiration, Jackson Hole, drop in Treasury yields, all had a large impact on price. All right, let's take a look at some levels. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is for the week. This is based on the options market. And note that SPX is trading well above the upper weekly expected move. Then the dashed blue lines, these change every day. This is the lower and upper daily expected move. And note that SPX is trading just below the upper daily expected move. All right, so both those based on the options market. You can find these, should be able to find this information in any trading platform that has an options chain. All right, let's take a look at the Spotgamma levels now. Those are shown with the dark red horizontal lines. I'll go over the key daily levels. These are proprietary Spotgamma levels. First of all, there's the put wall at 4,300. That's a strike with the largest net negative gamma that can be expected to act as support. The next level up is the volatility trigger at 44.35. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance volatility. So negative gamma environment, market makers trading with price, that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that, and we'll take a look at this in a minute, SPX, gamma notional at the beginning of the day was positive, and again, SPX trading well above its volatility trigger in a positive gamma environment. And the next level up is the 4,500 level. That is the call wall. That's the strike with the largest net positive gamma that can be expected to act as resistance, and above that level, Spotgamma considers SPX to be overbought, overextended. And they have statistics that show that the 1 day and 5 day returns after a breach of the call wall are negative. And that is also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And we'll look at that 4,500 strike, look at the absolute gamma in just a minute and see how important that level is. And there were shifts higher in levels for the SPX. First of all, the volatility trigger shifted slightly higher today, and then the most important, the absolute gamma strike, shifted higher to 4,500 from 4,400 yesterday, so that's bullish. And then on the other hand, even with the rally yesterday, the call wall for SPX did not shift higher. It did shift higher for the SPY, and this call wall yesterday for SPY at 446 was somewhat of a technicality. And again, we'll look at the absolute gamma strikes in just a minute and see how important the 450 level is for SPY and the 4,500 for SPX. All right, so those are the key daily levels. SPX trading above the upper weekly expected move, the volatility trigger, and the call wall. So that is a 30-day chart. Let's take a closer look at a 1-day chart. Zoom out just a bit. So these are the levels that are in play for today. Here's the call wall, 4,500, and then the upper daily expected move that has more or less been acting as resistance. Price has not been able to get up above that level. All right, let's take a look at Bookmap now. So in Bookmap, I have my cloud notes, and I have the SPX level shown on this chart. So here's the 4,500 call wall, and that's also the absolute gamma strike for SPX. And then here's the SPY 450 absolute gamma strike call wall. And if we scrunch this up just a little bit, we'll see the upper daily expected move for ES at the top of the screen here. All right, let me point out that there is a difference in the price and the points between ES and SPX. And today it's around a little bit over 8, 8.5. I'm using 8. So I'm showing SPX, the 4,500 absolute gamma strike call wall at ES 4508. So ES minus SPX equals around 8. It's a little bit more. All right, so the levels in play for today, the upper daily expected move and the call walls. So the S&P 500 trading now above the call walls for SPY and SPX and a little bit overextended at this point. All right, let's just take a look at, for some reason it's not showing the was not showing the lower portion of the screen here. Just want to point out the support level this morning after this sharp drop right around 10:15 is the SPY 449 level. All right, so those levels in play for today: SPY 449, the call walls 4,500, 450, and then the upper daily expected move. All right, I talked about shifts and levels for the SPX. Absolute gamma strike shifted higher, and for SPY, the volatility trigger shifted higher, the put wall shifted higher, and the call wall shifted higher, and the absolute gamma strike shifted higher. So most important, the call wall and absolute gamma strike now are both at 450. So very bullish shifts higher in the in SPY. All the key daily levels shifted higher. All right, so that's the S&P 500. Let's take a look at NASDAQ now. Here's NASDAQ. And we'll take a look at QQQ chart in just a moment and see the 374 level, that's the zero gamma level, acted as support, and the 377 level acted as resistance. Let's take a look at a QQQ chart. We can confirm that. So here's the 377 level that acted as resistance this morning, and now price is oscillating around that level. And here's the 374 level that acted as support this morning. This level, for some reason, on this script that's available from Spotgamma to subscribers, is not showing this 374 level as the zero gamma level. It's not shown in red, but it is the zero gamma level. All right, so range today for the NASDAQ, 377 on the upper end of the range and 374 on the lower end of the range. Let's take a look. We'll just take a quick look at NDX, and there are really no NDX levels directly in play for today. There's the 15,500 large gamma 2 level up above. Well, let's go back to Bookmap now. NASDAQ. So again, price chopping around that 377 level, QQQ 377 level, as well as the NQ 15,500 level, with the upper daily expected move up above. And there's that NDX 15,500 level. All right, shifts in levels for NASDAQ. The put wall for NDX did shift higher and was a strange move higher yesterday. The put wall is above the call wall for NDX, and it moved even higher. And then for QQQ, the volatility trigger shifted slightly higher, put wall shifted lower, but the call wall shifted higher, and that's most significant, from 370 yesterday to 385. So theoretically giving the NASDAQ more room to run to the upside for QQQ. Again, the call wall, this is the most important shift for QQQ, 385, 370 to 385 for the call wall, and also for NDX, the absolute gamma strike also shifted higher to 15,000. And that's the level that has been in play for quite a few days. I've talked about that. All right, let's take a look at gamma notional. We'll see how market makers were positioned at the beginning of the day. I'm going to look at gamma notional for SPX, SPY, and QQQ. Note that all these shifted higher, so now SPX gamma notional is positive. Market maker's position on the gamma curve was positive at the beginning of the day. So in this case, in this situation, traders are short puts, market makers are long calls, and they have to, so traders are long puts, short calls, market makers long calls, and they have to sell futures as price increases to hedge their delta exposure. And then still slightly negative for SPY, but less negative than yesterday. And then now pretty much neutral for QQQ, just slightly negative. All right, let's take a look at some information for SPX. I do want to focus pretty quickly on these absolute gamma levels. I'm going to look at 4,500 here. Very clearly, the absolute gamma strike, the strike with the largest absolute gamma. Orange bar is showing positive gamma, call gamma. The blue bar is showing negative gamma, put gamma. And that is again, the absolute gamma strike and the call wall. And we'll take a quick look at SPY. Again, gamma concentrated at the 450 level. 450 is the absolute gamma strike and the call wall. All right, so that's where those levels come from. Let's go back to SPX. Take a look at one other thing. This is the Vanna model. What this chart is showing is market makers delta notional on the vertical axis and how that changes with changes in price, shown on the horizontal axis. There are two curves on this chart. The gray curve is showing how market makers delta notional changes with changes in price only. And then the purple curve is showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. So Vanna is a second order Greek. Let's take a look at, see where SPX is trading right now. Whoops. So SPX dropped down, so found resistance again at the 45, just below the upper daily expected move. Right now trading around 45.11. So let's locate that on this chart. So that's right around the bottom of the curve. So the point of looking at this, so what this means is, let's say SPX was way up here, increase in price, market makers would have to buy back short hedges. But in the case today, in this positive gamma environment, this portion of the curve is really more important. So this is indicating in a positive gamma environment, market makers have to trade against price. As price increases, their delta notional increases, and they have to sell futures. So right now, SPX is trading just right around the bottom of this curve. So there is no Vanna tailwind like there has been the last few days in the negative gamma environment. That Vanna tailwind, put Vanna tailwind, is gone. It's all that fuel is all burned up for any boosting a rally higher. And we can just take a look at how this curve has shifted for the last few days. So this is today, more typical curve for a positive gamma environment. And then yesterday, gamma notional was negative, slightly negative. This curve a little bit, certainly more typical of a negative gamma environment. And then this is the day before, on Monday, that gamma notional was even more negative. So a shift from negative to slightly negative to positive today. And Joe, I'm not sure what happened to your post. I was going to take a look at that. It was kind of lengthy. I'd like to take a look at that. If you if you looks like you deleted it in Discord, I'll be glad to take a look at that. It was just a little bit too long for me to take a look at during my webinar. All right, so that is the information that I look at for my planning process, positional analysis. So based on this, my thesis for the day was, first of all, looking for lower volatility than the last few days because of the positive gamma environment, and also really looking for more mean reversion to about SPX 4500, considering price trading above that level to be somewhat overextended, overbought. All right, let's take a look at some setups now. I'm going to start with the S&P 500. Let's zoom in on the morning session. So strong rally this morning, really supported by aggressive buyers. You can see all the green volume dots, market buy, minus sell. A lot of aggressive buyers in there. When the dot is green, that buy minus sell, there are more buyers than sellers. That's what drives price higher. Also buy stop orders. So the dark blue line, that's cumulative volume delta, an indication of the aggressive buyers. The rising yellow line is showing buy stop orders, fueling the move higher. Also shown by these small green dots and these numbers here. And notice on the way up that larger traders start to sell with iceberg orders. That's shown by this falling light blue line. So as price starts moving up toward that upper daily expected move, these are not really extremely large numbers, but large traders are selling with iceberg orders. And we'll take a look now and see what options traders were doing. Move that off. Let's go take a look at Hero. This chart is the Hero signal, hedging impact real-time options. The white line is price for SPX. The purple line is the Hero signal for a combined signal. Whoops, wrong tool. Combined signal for SPX, SPY, XSP, and ES futures, all combined into one signal. So if you trade any form of the S&P 500, this is really what you want to take a look at. All right, so let's take a closer look at this chart. So again, a combined signal for SPX, purple line showing options trades, market maker hedging flow for the S&P 500. I'm going to zoom in. So this is right here, this is 9:30 a.m. Eastern Time, the beginning of the cash session. And what stands out to me as price was increasing, there was really little support, very little support from options traders. So not really aggressively buying calls or selling puts. And then this Hero line started to diverge lower. There was one last little push higher, and then options traders started aggressively taking negative delta positions. So we know that, going back to Bookmap now, so we know that the move higher was fueled by aggressive buyers as well as buy stop orders. We know from looking at Hero that options traders started taking negative delta positions, and we also know that larger traders were fading this move higher with their large orders they used to hide their size. So it took a while for this to play out. It was a lot more clear in the NASDAQ. A very sharp move up, sharp move down, right at the 377 level. We'll take a look at that in just a minute. So anyway, this set up a nice short, very sharp drop, and you can see the couple of trend breaks there, and then aggressive sellers really start to come in, shown by the pink volume dots there, magenta, showing more aggressive sellers than buyers. And notice this stop line and also the CVD flattens out. So it's rising, flattens, and then starts to drop sharply lower as aggressive sellers come in and options traders taking negative delta positions. And so the basis for this setup, that's the order flow, that's what I'm watching, but the basis really was looking for a reversion to the mean, a move back down towards the SPX 4500 and SPY 450. All right, let me check for questions. Truman asked, do market makers shift from being short calls and long puts to long calls and short puts? And does that shift their gamma exposure from negative to positive in that order? Let's take a look at let me go take a look at something. So this is for SPX. This is the gamma curve. So yeah, when when the current position moves around on this gamma curve, that's the shift. Let's see if we can find the. So there's the volatility trigger. Right around there. So that is still, that's not the zero gamma level, but it's close. So this is where the shift occurs. And, that doesn't mean necessarily that above that level, market maker's position is totally long calls and short puts, but it shifts. The balance is shifting, and that is that's where this shift occurs. So Truman, I hope that answers your question. All right, so that's the S&P 500. Again, no support from options traders in the morning, and the aggressive buyers and sell stop orders, that kind of dries up, and large traders selling with iceberg orders, and that leads to this nice short quick drop lower. Let's go back to, and that was good for almost let's say 2.5 SPY points, even if you got in at 451 and price dropped down to 449. That level acted as support. All right, let's zoom. All right, so since then, price has reversed higher and more of a sharp move up, sharp move down, and then more of a grind up, and now rolling back over. Let's take a look at NASDAQ. So pretty similar action in NASDAQ, just I thought a more clear read. This reversal at 377 was, first of all, very clean at exactly at that level. So anticipating that level, that I look at every QQQ round number level as potential support or resistance, and watch order flow to confirm that. And as we can see here, QQQ 370 almost to the tick, acting as resistance. QQQ 374 zero gamma level almost to the tick, acting as support. So here's the setup. This break of this wedge right at the 375 level. NASDAQ takes off higher. Pretty similar situation to the S&P 500. Aggressive buyers start to come in. You can see all the green volume dots, rising cumulative volume delta, also buy stop orders shown by the rising orange yellow line. As well as the small green dots there. That levels off, and then aggressive sellers start to come in. You can see by the magenta dots, more sellers than buyers. Let's see what options traders were doing. Go back to Hero, take a look at NASDAQ. So nice, not perfectly clear because of this little bump up, but that was starting to set up a nice divergence. Short. Let's go take a look at NASDAQ now. Here's NASDAQ. And again, this is a combined signal here for NASDAQ, for NDX and QQQ. Zoom in on this. And there was a pretty strong confluence between options trades, hedging flow, and price action, both long and short. We'll zoom in this morning to the morning session. It becomes a little bit more clear. So not really a divergent setup like the S&P 500, and more of a just a confirmation for the short right around 10:15. So that's NASDAQ. And one thing that I forgot to do, let's go back to the S&P 500. I'm going to separate out puts and calls so we can get a more clear signal about what traders are doing. And this makes that short setup even more clear when you look at the morning setup, that traders were buying puts from the open. Let's just zoom in on that. And Joe, I think this might have been what Joe was showing. Zoom in on this a little bit more. So from the open, traders were buying puts, started buying puts more aggressively, and they stopped buying calls. They were buying calls. They stopped buying calls, started selling calls right here. And that was a great confirmation of a short right around 10:15. So Truman, that did answer your question. Great, you're welcome. And Trade and Sale, hello, glad you're here. And thank you for your kind words there. All right, so here's more in depth about the S&P 500 short setup. And again, Joe, I think this might have been what you were posting. Let's take a look at NASDAQ. We'll keep the puts and calls broken out. Zoom in on this. So similar in the morning here, you can see that call buyers helping to drive price higher. They take their foot off the gas. And traders were, it looks like, selling puts, start buying puts. Price moves lower. So separating out puts and calls gives us more clarity. All right, so those are the index products. Let's take a look at a few stocks. Going to take a look at NVIDIA here. This is, for me, this has been the stock that has provided the best trades, the most clarity in the last, at least the last couple of weeks. Hedging flow giving very strong signals, as well as order flow. So we'll start with NVIDIA. And the thing that I want to point out is, first of all, there was again, strong confirmation for short first thing in the morning, then a long, then short again. And notice right here, this flow alert. And this is something new. May not be available to everyone. I'm on the beta group, but this is looks like provided a great signal. There's no way of telling from this. This may be hard to see, but it's a little yellow dot. I don't know if it was, I assume it was a long signal. It certainly would make sense to be a long signal. And that was a great signal for a long. So let's go take a look at Bookmap. Go to, clear this up. Go to NVIDIA. So here's that flow signal right at, I have it with the red rectangle there. Let's zoom in. And note that 500 is that's the call wall and the key gamma strike, and that is definitely the target that's in play. Pretty clear to read shift in order flow for NVIDIA. Notice all the magenta volume dots on the gray on the way down. Some green dots start to come in, and then NVIDIA makes this final push down to 487, and then aggressive buyers start to come in. And just a very clear line of aggressive buyers shown by the green volume dots in confluence with that hero alert from Spotgamma. All right, let's go back to hero now. We'll separate out puts and calls. Truman says NVIDIA looked like morning price was driven by call buyers who were buying dip and selling rip until about 11:30. All right, let's take a look at that. Separate out puts and calls. So traders were, and that's a good observation. Thank you, Truman. So it looks like the put line is pretty flat, not really significant. So this notional value, so they are buying puts, but right now that is 3.45 million negative versus call buyers right now at positive 98 million. So quite a difference. Call buyers have much more of an influence on price action in NVIDIA. And Truman, you're right, they were selling calls, oops, wrong tool, selling calls at the open, sorry, selling calls, buying calls, then started buying calls again, helping to drive price higher. And here is the 500 call wall key gamma strike. All right, let me look for questions. All right, so Trade and Sale says you flattened out as short, had a great trading day. It was you who led my way back to day trading. Thanks again. You're very welcome. Thank you very much for your kind words. I really appreciate it. That makes my day when what I'm doing can really help someone. Again, thank you very much, and glad you're here, and glad this is helping. All right, so there's NVIDIA. For me, again, the stock that has provided the best trades, the easiest to read order flow and hedging flow. All right, let's take a look at a couple of other stocks real quick. I've got Microsoft. What I was looking at here was this divergent short. Notice the sharp drop in Hero, and then price follows a few minutes later just below the 330 call wall key gamma strike that could be expected to act as resistance. Let's go take a look at Bookmap, take a look at Microsoft, and let's zoom back out on NVIDIA. So NVIDIA not quite making it up to the 500 call wall. Let's go to Microsoft. All right, so here's the 330 call wall. And somewhat like the S&P 500, a little bit of a chop up and down before the sharp drop lower right around 10:15. And then you can, we'll zoom in on this just a little bit. See the shift in order flow. Really also somewhat of a lack of liquidity, but nothing but magenta volume dots. So good for 2.5 points in Microsoft. Let's go take a look at Tesla now. All right, there were some alerts in Tesla as well. So let's go take a look at Hero. We'll focus on the alerts first, and then we can see what, we'll take a look at what options traders are doing. So for the day, options traders they've been buying puts all day. And it looks like somewhat like NVIDIA, call buyers, sellers, buyers driving price action, and then finally traders start selling calls, continue buying puts, and price reverses lower. All right, let's take a look at these alerts. So here is one alert. So Slaudazari says some NVIDIA news just coming in. We'll go back to NVIDIA in just a moment. So here's one alert right around 10:20. Another alert. All right, so Slaudazari said Biden blocks sale of NVIDIA AI chips to Middle East over China fears. So that we'll take a look at NASDAQ and NVIDIA in just a minute. So here are these flow alerts. So first of all, 10:20, and the next one right around 12:54. All right, so let's go back to Bookmap now. So here's the first alert that I have circled here. So that was a great alert for short. Same here. So two very good alerts, hero alerts for Tesla. Go back and take a look at hero again. So this was right around the time that most everything else moved lower. So again, nice alert, short setup for Tesla there. Let's go back and take a look at hero. Go back to the total signal. So Tesla, there were options traders, market maker hedging activity, setting up short, long, short, then a long again, and it looks like most of the alerts were for shorts. So right now, options traders are definitely taking negative delta positions. I would certainly not be looking for a long in Tesla. And notional value for the day is negative, minus 300 million. So again, traders have been buying puts all day and started selling calls right around 12:30. Well, let's take a look at NVIDIA. See what sort of impact that news had on NVIDIA. So it doesn't appear to have affected NVIDIA too much. All right, trade and sale. Enjoy your evening. Glad to see you here today. Have a great evening, and hope to see you tomorrow. All right, let's take a look and see what's happening with ES first. So a lot of aggressive sellers came in right around, looks like right around 145. You can see all the magenta volume dots. Large traders coming in Iceberg orders. Let's see what options traders are doing. So price still slightly above SPY 450 and SPX 4500. Looks like more aggressive sellers. This light blue line is VWAP. So price breaking below VWAP. Let's take a look at Hero, the S&P 500. So options traders have been taking negative delta positions. It looks like that has accelerated a little bit. Remember, price overextended above the SPY and SPX call walls. Notional value for today, pretty negative, minus 2.92 billion. So options traders definitely fading this move. Let's just see what they're doing. So they're still buying puts, still buying calls, or actually they have stopped buying calls, but this notion of value for calls is still positive. So net for the day they have been buying calls. SPX, SPY, ES, XSP, they've also been buying puts. Just a steady, very steady process of buying puts all day. And the put number is minus 3.2 billion versus positive 265 billion. So put buyers definitely more aggressive today. Let's take a look at NASDAQ. And really, not a lot of clarity here. Up and down signal. Traders buying calls, buying puts. It looks like call buyers more aggressive, but price is still moving lower. Holy Trinity says, what's up, team? Love this channel. Thank you very much. Glad you're here. Welcome. More clarity, definitely for me, from the S&P 500. More consistent with options traders taking negative delta positions. So price is trending lower. The move lower supported by options traders. We just saw that. Also aggressive sellers shown by the falling cumulative volume delta. There was some support. The iceberg orders. That was not, there was no follow-up to that. Iceberg orders have leveled off. And no stop orders that are starting to decline now a little bit. So more sell stops starting to come in. So now S&P 500 approaching the SPY 450 level, and then the SPX 4500 level below that would be the next two targets. So NASDAQ sort of rolling over, maybe maybe finding support at 450. All right, my time is up. I want to thank everyone for watching. Thanks for your questions and comments. Again, remember my contact information. If you have questions after this webinar, you can contact me on Discord, Doug P. You can post content information related to the topics of my presentation of the channel in the Options-Doug chat channel in Bookmap Discord. And then also watch for me on Twitter, X. All right, everyone, thank you very much for watching. Thanks for your questions and comments. Remember PCE data tomorrow morning. We'll talk about that tomorrow afternoon, and I will see you tomorrow. Thanks again. Bye.